Morning, guys. John here, Mr. Forex Fire. Let's just get a few things set up and then we can have a talk on what we're doing today, what we're anticipating, and what's happened at the back end of yesterday's session. Just waiting for my Excel sheet to open up. So at the moment, we've had a fantastic few weeks. Okay, we've had a fantastic few weeks, 4 or 5 weeks. Just going to share the screen before we go into the chart. So we've got a total of 40.92%. Okay, every week we've been profitable. This last week, in all honesty, we are at around about where are we at? Points. So we're about 0.7% in profit. So we're still in profit, and profit's profit at the end of the day. That's where we are overall. However, I just want to show you something, and this is where it is, and it's where it's going to stay at the moment, because I will only document stuff that happens within the time frame and allowance that I do, if that makes sense. And I'll show you what happened yesterday. As you can imagine, yesterday we were entering a trade, or I was entering a trade on my live account. Okay, 22nd a day on my live account. And this was on the back end of yesterday, to be fair. Okay, so let's have a look. And it was a 5%, right? And it actually came in. It took it 2 hours of play, as you can see in here from entry. Took it 2 hours of play for it to enter to actually hit our 5%. But because I'm documenting this between 8:30 and 10:30, I'm not putting it on the Excel sheet. I did win with this on my live account. I'll be honest with you, because I did set it as I was seeing at the end of the trade. And on the asymmetric compounding, we were on about obviously win 2 trades sort of thing. And you could then do the 1 + 5 gives you 6. So you 1 to 5, that 1% becomes to the power of 6. And I did say at the end of last night or yesterday's session, yesterday morning session, that I was going to risk 6% on that trade. That would have given me 30% growth. Okay. Now, when you look back on this, and again, I'm not documenting it, but I'm just going to give you an idea of where this would have put us if this trade had ended and done it within that time allowance. That would have put our overall growth for the last 6 weeks to 70%. Now, that is fantastic. That's the power of asymmetrical compounding. However, it didn't do it in the time frame. So like I say, I'm not hiding behind anything. I did mention this on yesterday's live session. If you haven't seen that, you can go back and see it, and you'll see that I was there talking about all this stuff there. So what we'll do is we move on. And I'm just going to get rid of some of this stuff. Bring my fire wand over, the trusty fire wand. Right, so as you can see, that the price has always been like a bit of a consolidated phase over the last few days. It's broken the structure now, and it's come on to the downside. I said I was anticipating a move, as you can see on here on the bias a few days ago, a touch into this area. It didn't quite do that. It's now rocketing back off up to this consolidation zone once again. So again, what I'm going to do, guys, I'm just going to mark out the path for now, okay, as I always do. And again, if you're watching this for the first time, don't worry about the candles not being shown. This is done on purpose. I zoom out of everything, to be honest, and then I just mark the more prominent high to lows, if that makes sense. And there's a reason why I do this. It's just simply because we get an intermediary price action on the 1 minute, and when we go up time frames obviously that fractal time that's within the bigger path that I'm drawing now becomes on to a singular sort of swing point, if that makes sense. So again, if I was to do that, and then let's see, I went up the half hour, and I do this every session just to show you. You can see from here, bang, 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 and it's something I've sort of done to the eye over the years, something I've come accustomed to be honest. Again, with regards to what we're doing on a directional bias, I'm still holding, and I'm not drawing any sort of supply and demand areas, simply because we've got these lower parts and the higher parts still have not been met. So I'm just going to run straight into play. Let's have a look. So at the moment we broke structure here, so we are on a bit of an uptrend at the moment. We might be able to get in on a trade, to be fair, very, very soon. I'm just going to mark something out for now before I get the goalposts done. Just going to put this here. Mark that there. Mark it down here. Mark this up there. Yeah. Just looking at something there, right? So just bear with me while we put these goalposts on. So the time is, as we always do, 8:30. Let's make this bigger, John. Let's get this bigger. Let's get into focus. Let's get into focus. So 8:30. To 10:30. Now, just remember, we are on percentage wise, we are on around about 40% in profits. Again, it's Friday. I don't tend to like to trade too much on a Friday, however, because this is what we're doing going up to Christmas with regards to compounding the asymmetrical stuff. If we can see a trade, we'll try and enter it, just on the purpose that we are back testing and testing stuff, but doing it live in front of your very eyes. Okay, so the last couple of days we focused on a few things. One was point of interests, and I done a session yesterday and it was all about imbalance. So today I might focus on things like breaker structure and liquidity. I think we'll do breaker structure and liquidity today. We'll go a bit more in depth with that sort of stuff. So with that being said, let's just make sure the fire one, yeah, the fire one's working. And let's mark up where we are in the charts. And there's not much to mark up, to be fair, because what's happened is we've had this initial down maneuver, and then we went into an accumulation phase, and that accumulation phase from 7:15 yesterday right the way through till 7 o'clock this morning, that accumulation phase has only held around about 10 pips, whereas the last few days the move, or the impulse move, has more or less been on the early hours of the morning. This is sort of starting to move now just before the session. So that was around about, how many pips did I see there? Just over 10 pips or so. The impulse drive move now is 15 pips and still going. So from 6 o'clock or 7 o'clock this morning, only 10 pips a lot of times. So again, because I'm very visual, date range, you're talking 12 hours for 10 pips, and then you're talking about an hour for 15 pips. So massive difference there. 12 hours of consolidation for 10 pips only. We've had an hour and we've already done 10 pips. So the euro must be starting to get a little bit strong against the USD. We'll just get this. Let's just move in, see where we are. Get this pull up. So again, when we talk about breaker structure and things like that, you can see here, this high point has broken structure as it's moved from this area. Okay. So as we've had the high to the low, we've gone to a higher high because it's broke that structure. Like I said, I don't want to get too much involved from that consolidation zone. So we'll just do that. Let's class this as the low. That there, like I say, is a BOS. That's abbreviation for break of structure as we've moved up into a channel. We've got a lower high. That is a higher high. And then what's happened as we drive further up, coming down, coming up, coming down, coming up, you see how the intermediary price is moving. And then it's not until we get the push through this area here, that's a breaker structure. Okay, so that's when this becomes a breaker structure, sorry. So that then, as it becomes a new higher high, okay, because that's what that will then become. That will then become a higher high. We then get a pullback, okay? So what happens is this would then reside as a liquidity area, okay? That would always be a liquidity area until we get the pullback. We get the pullback, okay? Generally, the pullback will snap into an area where you've got an order block, okay? Because again, breaker structure came here. If you want to drill further into this to be more detailed, we had the high pullback, breaker structure was here. So liquidity, if you want to be very, very detailed, liquidity was held here, okay? And this just shows you need to have a sharp eye, okay? So as we get the pull up and out of this then officially becomes a breaker structure. But watch this. Marking your order block. As you get the breaker structure, you get an order block, which is that there, okay? See this candle? As we move in, this candle is an order block. And I think you know where I'm going with this for the guys that have been sort of watching this for a while. As you've come up and pulled out, or as you've gone up for liquidity, okay, you've pulled out the breaker structure, creating new liquidity, you've had a pullback. The pullback has initiated the price on here and an entry, okay? As you've done that, you've pulled up, creating on here a breaker structure from that point, okay? That then becomes the new liquidity. Can I do this? Can I do this on there? Yeah. So then that comes the breaker structure. We come up. That was liquidity. Okay. In fact, let's just get rid of that. Cancel. We'll get rid of that. So this here, just to make it more visual. Okay, right. So as we've broke the structure, okay, That was liquidity, right? As you can see from here, we'll do this from here. Get that back. Right, so as we come up, okay, liquidity, okay, we've got liquidity here, we've got a breaker structure here. This then becomes the order block, okay? This then becomes the order block. We get a touch in, very, very nice, respects the area, okay? So that would have been an entry. You've come up, took a liquidity grab. This then becomes a breaker structure, okay? So we go forward, forward, forward. There's into the order block again, okay? And now what's happened is we have formed new liquidity at the moment. So this would reside as liquidity because we've had the breaker structure, okay, from there. And that breaker structure came from this point, flagged down into the order block, pushing through here for the breaker structure, creating a new high for liquidity high. Okay, that meant, let's just see if this rings out as you follow the trend. Let's just see if we would have had a touch here as well. Order block again. If I fall flat my face, I fall flat my face. Well, let's see. There's the touch down into the order block. Okay. And again, the target would just be this on your TP on liquidity until it's broken. So we go forward, go forward, go forward, we go forward, go forward. It's still holding within the order block. It's coming up. There's your breaker structure. Okay. There's your breaker structure and a second trade. That's one. Okay. And we go forward. So that then, because you've had a breaker structure, forms your liquidity. Okay. So what we've got at the moment is we've had 1, 2 trades out of 1. This means on a refined area, okay, that's an order block. We'll cover the wick on this. However, as we've bounced up to break the structure here, you've come in and you've touched the order block again. So there's entry number 3. Okay, these will just be very, very fine 1 to 1.2s and things like that. We go forward. We haven't broke a structure, still within the order block. We go up. We go up. We break liquidity. There's winner. Let's take a look. All right, so we've got bosh. So there's number 1. Number 2's 1. Number 3's 1. Okay. Now, that there becomes, again, I hope you're following along. You need to watch this video back. You can do. That becomes a breaker structure at this point. You've got an order block more or less residing inside of the order block here at this stage. Let's reside up. We've come down to touch into it. Bang, you've got a break again. So that means liquidity's on the higher side at the minute. Right? Because the breaker structure has happened here. You've got your touch instantly into the order block. What you've got here is a high liquidity area. Go forward, go forward, forward, go forward, go forward, go forward. So from there, guys, mouse is playing up. This becomes a breaker structure. Okay, and that's took the TP as it's come into here to touch here. That's took the breaker structure there as a winning trade, and then as we go on, it's just climbed further and further because we didn't come back down underneath this area. So it just climbed further and further. So I'm just going to stop that there. Go to replay mode. And we're coming down to entry at the moment. So at the moment on this channel at the moment, if you were to follow this area, bang, like a step ladder, it's like a step ladder. 1, 2, 3, 4, 5. There's around 4 winning trades there from the touch of these order blocks on that trend alone. There's an entry on that. So at the moment, we are looking for protected lows on here. Will this be a continuation up? Or will it just drive down to start taking prices out on the lower highs? Couldn't get my words out there. See what happens on this at the moment, guys. This just gives me time to set up this bit. Again, it'll possibly come and stop us out, knowing my luck this morning. The 30 AM start. $10:30 finish. So I'm just going to pause the video, see where we are from there. So that's where we were from yesterday. There was a nice 1 to 5 taken. Didn't document it because it wasn't done within the parameters that I do. However, I did take it as a live trade, as I was mentioned towards the back end of yesterday. I got a nice 5% on that on my live account, which I'm very happy with. And so far over the course of the last 5 to 6 weeks, I'm very happy with how this has been playing out with regards to concentrating everything in on one sort of frame, which is your goal posts and things like that. So we'll pause the video and we'll see what happens with this. We'll see what happens with this in the next 5 or 10 minutes. Hi guys, we are in the trade still. We've more or less hit the stop. We're in a little bit of drawdown. So again, looking overall, it looks as if it's coming to attack this trend, this impulse that we've had. I'm hoping it's going to come up and sort of give us a mitigation sort of thing. However, it's flagging back down into these pullback areas, if that makes sense. So just going to move that down a touch. We've got a 1-to-1 there at the moment. I'm just going to use that area there. I'm just going to put that as a possible TP at the moment. And then I'm going to take this back up to the liquidity side, where we had it. And if we hit this, I might think about closing it at the 1-to-1, to be fair, because it's just the way that that's flagging down at the moment into the drawdown area. We have got ourselves covered. In all honesty, however, when we look a bit more into this on the pullback, and for the long, if we took the trade from that standpoint, okay, up to the liquidity area, there could have been a 1 to 5. In all honesty, when we're looking closer and drilling this in, okay, I've actually took it from this here, the 3 or 4 candles there, but this is wicked beautifully into this candle here, and that would have only been around about a pip of stop loss, and we could have refined it even better to a 1 to 5.5, which again, if this comes up, it's fantastic. But in hindsight, if we look at that area where I was looking at a 1-to-1, even that, it's a 1 to 3.83. I was a little bit rushed this morning, so I'm not too worried. Again, we look back and I do, like I said, I do this live in front of you. I've got nothing to hide behind. We have done our structure for today. I've spoke about these breaker structures on this trend moving up. Hopefully this will hold its structure, okay? But we could have refined this down to an even better entry, to be fair. However, we hold. We've got 1.75. With the anticipation of if it hits here, I might just take it out for the 1% profit for the day just to get us off on the board and running on that 1-to-1. What I'll do is I'll pause the video, okay, guys, and we'll take it from there. So at the moment, it's coming up towards what I call my half-time area. So I'll possibly go and make a cup of tea for now. I'll be back in a moment. Hopefully this will still be holding while we're in there and see where we are by the time I come back. So I'll not be long, guys. Just bear with me. Hi, guys. We're back. Half-time cup of tea. Out of breath. I'm knackered. In pain this morning with my arthritis, but hey, oh, that's another story. Right, so we did go into a bit of drawdown. We would have wicked beautifully into this to get us towards a 1-to-5 point odd. This would have been a 1-to-3 if we took the entry from here, where it's wicked beautifully. It's starting to climb a bit. That is a 1-to-1 area based on this sort of stuff. So if we mitigate into this area here, I might just call the trade. Yes, call the trade there, 1-to-1. Okay. As you can see, 1-to-1. I'll call the trade there. That's 1% on the board. It just builds that pot up a little bit for this week. Again, it might go and push up to this higher side. But going on this flag maneuver back down towards here, I've got a feeling we're going to get a reversal soon as well, to be fair, because we've had such an impulse drive coming up here. So the close on the 1-to-1's good. Let's just take a look. Minimize that, open this. Let's get this on the board. 1%. And let's update this live. So we're back up to nearly 42%. Bearing in mind, again, earlier on the video, I mentioned and showed you where I was on the one from yesterday. I really do wish that it ended and closed before the time allowance, because not only would have been 5%, we would have had it on the asymmetrical compounding, which is what I was mentioning at the end of yesterday's video. That 5% would have turned into 30. But hey, again, it was a good call. Just a shame it didn't happen within my time allowance today, but I did show you at the end of the last session where it was, and I have shown you today where it went to, but we don't document it on here because it wasn't within the goalposts. Okay, we've got to keep it fair, got to keep it square. Right, so what I'm going to do, guys, I'm just going to sort of draw a couple of lines on here. Let's take a look. So first of all, obviously a line here, and then I want to, if I'm honest, draw a line on here. So I want to see one of two things happen now: a push and out, or a push and out of there. That's the next move I want to see, one of them two, so we get a huge definitive breaker structure. Okay, so this is going to give me a chance. Just move me little biggies to share screen, do a whiteboard, and then go into something a bit more sort of analytical we use, guys. So when we talk about breaker structure and liquidity, okay, we're going to talk about that a little bit today, but on the whiteboard. So we've got the drawing tool out, we've got the draw, we'll do this. Now let's get the black on there, right? So we've got like a starting point, okay? We have a starting point. So let's say in this occasion, we are on that little bit of an uptrend on the USD. What's happening is we've got the buyers in control, okay? They're running up the hill. They're running up the hill and they've got a ball. It's the best analogy that I like to call this, okay? So as they're running up the hill, what happens is they drop the ball. The ball starts coming back down the hill on the opposite side, okay? Now, normally, when it comes down the hill, we normally get a 50% pullback. Normally, it's not always, but because the buys have been in control quite a bit, we would normally get a 50% pullback. There's more probability in that happening than any other sort of area within the structure, okay? So from there, when you get this, where the buys are in control, then you get the pullback, okay? The best thing to do on your charts is, let's have a look. How do I get the color on? I don't know how to change the color, not to worry. Right, so we've got the buys in control, they drop the ball, it comes down, okay? It starts pulling back. So when you start seeing that, it's always good to mark a line across the top, okay? So what happens is that there becomes a liquidity area, okay? That is formed a liquidity area. This could do all of this in the meantime, okay? Until we get that price comes through there. As soon as price comes through there, on your chart, you can simply then see, right, this has now become a B or S in my terms. So that in the industry is called a break of structure, okay? Now, as the buys are in control, okay, as the buys are in control and it continues to move up and down, it could do this for a while, it could do this, okay? You've got a bit of a pullback occurring here. That there is now your new liquidity area, okay? And again, these lines right across, you may get this, okay? And then all of a sudden you get another spike. As soon as that spikes up and it crosses your next higher high, okay, that then there becomes a break of structure, okay? And then so on until obviously price comes back down. If price was to come back down and do this, okay, that's a higher high still. That is your liquidity area, waiting for price to come up to either mitigate or push through to create a break of structure. But if price was not to do that, and then price started coming down in the opposite way, okay, as soon as price breaks through this sort of area here, because it's not quite there, you've got a protected lower high, okay? As soon as price, lower high here, as soon as price was to come through this area, then that there becomes your break of structure, okay? Because price would then leave behind liquidity areas, such as here, okay? And then once price broke through that area as well, that would then become a break of structure on the lower side. I'm going to see if I can explain this a little bit better on the charts for you. And again, guys, you can see on here, if we kept to this, we would have had a 175. Well, not quite. It more or less went to the top side, but we got a 1%. Makes no difference. Right. So the best way I can explain this at the moment, let's take a look. Right. That's consolidation zone, consolidate. Right, so what we've got is here. liquidity, okay? We've come down, up, down, up, down, up. We've broke structure. You can clearly see the crosshair. That there becomes a break of structure, okay? Where my point is now, that there is now what we call our new liquidity area, okay? So what happens is, we run it from here. So what happens from here is this will start to form. It pulls down, okay? It's still within range, okay, because there is a range as well that you've got to work with. That to that is a range. That is its own range, okay? We keep coming through. You can see there now, this here, cross out the left, is higher than this. That is now a break of structure. Once again, we move this over. Move this over. We just highlight this. That there forms the new liquidity. Okay. Let's bring the wand over. And as we go through, there's your break of structure there, you see, clearly from there. So there's a break of structure there. You have formed and identified a new higher side liquidity. And just stick along with me. Now you see here, what's happened is we've had price on the lower side. As we've come up and got a high, okay, we formed a high, we formed a high, we formed a high, we formed the peak of the mountain at this stage, a higher high, okay. Now underneath the higher highs, you have a pullback. So every time you've had a pull, you've got the buyers in control of the ball. They drop the ball, they come down, the ball gets dropped by the buyers, and that creates a lower high, okay. We started at the base of the mountain with a lower, okay. So it's called a lower high because when they've dropped the ball, it hasn't hit the floor, okay. So what's happened is that would be a floor. That becomes the range low to the high, okay. As the buyers went up, dropped the ball, it's come down. It's more or less just 50% of that range, okay. They drop the ball, it bounces, it comes all the way back up. You break the structure, it creates a higher high, okay. Let's just see if I'm sharing the screen. Am I sharing screen? I don't know whether I was sharing the screen there, but if I wasn't, I'm just going to run back on that. I apologize if I wasn't sharing screen. So again, what we're doing is we have created a low and then a high, okay, just to reiterate what's happened going back on this. So the buyers have been in control, okay, low to the high. The buyers will drop the ball, it comes down more or less into 50% of the retrace, and then it bounces, it creates a lower high at this stage, okay? Now, it's called a lower high because it hasn't went through the floor of the previous low, okay? Now, as that's done that, it's bounced, it's come up, and the bounce and retrace bouncing effect has broke structure of that high. So this then means this is a liquidity area at this stage, not a BOS, that would be a liquidity area. Thus, it's giving you higher high. We get the retrace back down again, it bounces, comes up. Now that's a breaker structure of that high high. This forms, okay? And as this forms, ignore all this at the moment, as this forms, this is the new liquidity high, okay? This is the new liquidity high, not the BOS at the moment. It bounces, comes down, and then comes and shoots up. As it shoots up and it comes, surpasses that high there, this here has been a breaker structure, okay? You then get the breaker structure. It's went to an ultimate all-time high at this stage, okay? We know it's gone further up in the future, but this becomes a breaker structure. It's bounced. This is its highest it is at this particular time of day, at this moment, or I should say back in the past. That creates a higher high, okay? Now, price plummets. And what happens is, as the pullback and the bounce effect comes in, okay, and it bounces up, you've got on the way, on the rebound, you've got lower highs, okay? And just stick with me for a moment here. You've got lower highs, right? Now, what happens, would be a bit more visual, what happens as these lower highs are created on the underside, these candles will hold liquidity, okay? Again, just do that. So each of these candles here holds its own liquidity. And I'll explain how they hold liquidity in a moment. So each of these are protected, what we call protected lower highs. Okay. So each one of these holds liquidity. And we talk about liquidity and everything else in smart money. Okay. So liquidity doesn't just have to be an accumulation of so many candles. It can just be one candle. And on this occasion, it is on the step ladder on the trend up. Because on the trend up, even though your higher side holds liquidity on the higher highs, when you get the retracement, before you get the breaker structure, whatever's created on the downside, in this occasion, the lower highs before the pull back into the continuation, it leaves behind a trail of liquidity. Okay, so as it leaves back a trail of liquidity, what's happened is every time this goes bang, it smashed through that price. Okay, that then becomes a breaker structure on the downside. Bang, it attacks this, it smashed through that again. That there becomes a breaker structure there. It smashes through all of these. Bang. All the buyers where you've had your protected swings. Okay, you've had your protected swings. You would normally have possibly stop losses, trail and stop losses, because people do trail and stop losses. All of these protected liquidity areas now become breaker structure. Okay, breaker structure. Bang, to come under here again. Breaker structure. Now, if we then go through and we'll follow this back as we come up, okay. Again, if we get the retracement tool out, and you can see on the fire zones, It's respecting these areas as it comes back up. And again, 50%, normally we get a retracement. This has went a little deeper than the 50%. If I put IP on here and put price action, it's actually retraced up past the 50%. So it's had a deeper retracement. We keep going. And now what it's doing, it's forming as it comes down. These areas here. Again, this would hold liquidity. And it starts again. Comes down, bounce, retrace, liquidity respected, retrace. This then has formed liquidity here, but at the same time, price rocketed through this area here. This has become its breaker structure. Okay, and the pattern just continues on. We come down. There's our breaker structure there. See, as we've come up, okay, we now form again liquidity on the high side. This now confirms this here is we confirm this here is a breaker structure, and this is just zigzag, and that's all price will do. And as we come down, you can see this range from there to there is the range, because what you've got is a lower high. Okay, your swing point, that's your lower high, that's your higher high, because that's where liquidity is residing. It's ranging within here, okay, until, I don't know whether it does, that there holds liquidity in itself on the downside. Okay, so that there will hold liquidity, that there holds liquidity. So you swing low to your swing high. That is your swing point. Liquidity on the high side, liquidity on the lower side. We come through, price comes out of here. Look what it does. Breaks our structure. So that becomes your breaker structure. We keep playing. Okay. Creates again on the lower side new liquidity. See how it's respecting it? Comes down to touch. So because this has attacked this area here, this then has formed what we call a lower area. Okay. And we're going to go back to the live chart in a moment. I'm just trying to give you guys a run through of what liquidity is and see how it's respecting that liquidity area. Not once, not twice, 3 times. And this is where the bankers or the money makers sort of hold a pool of money so they can come down and attack at a later date. This will probably go and attack the top side in a moment. Let's take a look. So now the range, because we broke the structure from here, okay, the range now becomes that. The range becomes what we call a bearish range, because we've had a break structure on the downside. Just pull that out. That's your range on the liquidity on the top and the bottom. Which one does it attack first? Comes down, takes out that. That now becomes your breaker structure. You've now got new liquidity. And the high side still stays the same on liquidity, but as you come down, your bearish move now comes into play. So now you've got a lower high, okay, to go with your lower low. This now becomes another lower low. So we are anticipating, in fairness, liquidity is now residing here also. Okay, so now you've got not one, but now you have two areas of liquidity up on the higher side. You've got one area down here at the moment. And as we play out, again, we'll just bring this down that little bit lower. As we pull this range out, okay, your range then becomes concentrated on that. There's your wick out, okay? So it invalidates this range, okay? So this here becomes a breaker structure. And we might see an attack to the upside. See, we get that, or is it going to come back down? And again, you just need to be visual. Liquidity. And the more you guys do this as well, the more you're going to get used to structure, the more you're going to be able to identify. See, here, we've had a breaker structure. We've now got liquidity here. We've also got a lower low, okay. The range also moves forward, comes down because we've had a breaker structure here, comes down to here. And you've had a liquidity grab up here. That is there at the moment. Is a high at the moment because it's come up. Is a high, I should say. As we come down, we've got another breaker structure, and we just play it up. Right, so there we have a breaker structure. This is the last couple, and then we'll move on to the chart. There's your breaker structure. There's your new liquidity. Okay, there's your new lower low. We've came up, we've attacked this high here and also this high. So we've taken out two liquidity areas. So that becomes breaker structure. And that finally has become a breaker structure. That is a new liquidity area. And again, the process just continues on and on and on. There's a new range. And that will be where you'll be expecting. So again, we use these ranges to the effect of the scalping technique, because when you get a push to the upside or a push to the downside, you are then factoring in what we call our order blocks. Okay, so once you get that, again, moving on from where we are, you would have had a breaker structure, and on here, breaker structure, retrace into the order block, retrace into the order block, retrace into the order block. We've had a spike out, retrace, would have been in the order block, but at this time, this took out all of this here. Let's get rid of that. This took out all of this, and on here resided liquidity as well. That was residing liquidity in itself until selling power came in, bang, 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 and took out a shit ton of of stop losses to the downside. Okay, so I'm going to go to the live chart. We spent a bit of time on liquidity and whatever else. We're stuck in a distribution phase at the moment. We've got a 1%. I'm going to pause the video, guys, because I'm going to have my cup of tea. Hope that hasn't been a little bit long-winded for you, but we're looking at sort of breaker structure and order blocks and liquidity today. I hope this is sort of making sense a little bit with how liquidity isn't just an accumulation of sort of pins on the top side or the downside. Liquidity can be held on a trend line, support or resistance, and again, liquidity can be held on a solitary candle, if that makes sense. So like I said, we deep dive into this here at the moment. So again, what you're seeing here, okay, that there in itself is liquidity. Okay, and just to use this as an example, that holds liquidity, right? Now, when you look, this here has not been broken. It's bang, 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 bang. We flag right the way down, okay? As we flag right the way down, look what it's done. That's your liquidity. It's been taken out. And as it's took out the liquidity, bosh, the buyers go back into control. So again, there's liquidity, there's imbalance. It happens on every time frame. It just, when you go to the lower time frames like this, everything gets more refined than what they do. Liquidity holds, I should say, structure will hold more on higher time frames than what they do on lower time frames, if that makes sense. I showed this yesterday with imbalance. So I'm going to pause the video and we'll be back in a second, guys. Hi everyone. So now it looks as if we have the breakout from where we are here. As you can see, we've got the break. I'm just going to quickly check on something. Oh, we do this. We've got the protected high. Up to here, it's a 1.22. We're stuck in a consolidated range, to be fair. So I don't know whether I'm going to be comfortable taking a particular trade. I'm going to wait a little bit longer to see if it'll show its hand. I don't think there's going to be much shown, to be fair. We've got a 1% win, which again is not massive, but still a win's a win, to be fair. As we scroll down into this structure wise, to be fair, we've got the highs. And again, sometimes if nothing's shown, we have to do simple things like this just to keep the sanity, if that makes sense. There's pointless in rushing trades and getting into it. If we can take a 1% out of the market in that 2 hours, then so be it. If you get more, you get more. You get days like this. And then from there, you've got lower lows. Again, a lower low here. And then certainly structure-wise here. Okay, so let's delve into this and look at sort of liquidity and breaker structure as well. Okay, so we've got liquidity resides on the higher side here. Okay, and then liquidity, let's get rid of this. We may hold this as a trade in a moment. To be fair, guys, that's going up. Yeah, we might have this as a trade shortly. Yeah, might be worth it to go 1 to 2 just about now. So I'll hold that as a trade. So what we've got, liquidity. Again, as we go down, all this is holding liquidity. All this is holding liquidity. Okay, all those are liquidity areas. Until price decides to reverse and come up and attack these. Once price comes up and pushes through these will then become breaker structures. Okay, On this side, we've got lows. We've come back, we've come in, break a structure on here. And as you can see on the downturn, if we look at the last up before the down, okay, we've got, that wasn't quite a break of structure, so I wouldn't have classed that one there. We can get rid of that. Okay, we'll just get rid of that. From here, guys, we've certainly had on this bit, here, we had that break of structure, pull back in. The pull back in, let's look to the left, the last up before the down, lo and behold, to the pip. Okay, so we've missed the trade there. However, this bit's important. This here was in a range, okay, range to range. It was stuck within a range, and I needed a more definitive confluent breakout, which is what we've now got here. Okay, this is now reaching down to a 1.22 to be fair, but if I'm honest, I would just be happy to go with a 1 to 2 if we got the pullback. So again, just going off on a tangent, sort of pull in, that would be the area, that would be the entry. So that's what I'm looking for at the moment. So from there, guys, again, let's go back to liquidities and things like that. We are now currently here. Was liquidity on the pullback? It come down, swing to swing, lower low to lower high, come down. It's broke the structure of the lower low. Okay, and we are now anticipating the pullback and return to the order block area, which is this here. However, we've got a wick of a lower high, which is pushed out of the order block. So I'm covering this here with that there. We are now anticipating a move back into this order block area at the moment to get a touch into here. See if we can get this before it is now 10 past 10. This happened yesterday. Again, I called out a 1 to 5. It played out, but it was after the time. We want this to hit the entry and to come out. If it hits entry before 10:30, it is an active trade. Okay. If we get to 10:30, it hasn't entered. Or in all honesty, I'll still have this activated on my live account, but for documenting purposes, it will not be ended. So again, I'm just going to open the calc on my main computer. I'm going to have the trade set. So this is my trade for today on here as well. Let's have a look. Let's just have things set up. Right, so I open the trade and then I'm going to have a partial TP on this as well. 163.80. So just bear with me for 2 seconds, guys. I'm just setting up a trade. 163. Right, so I've got my trade set on this. Hopefully we'll get an entry before 1:30. Again, I hope you're finding these bits insightful and educational with regards to structure on liquidity areas. Again, a little bit about order blocks. We creating, as always, structure, lower highs, lower lows. and how when we come down, it's forming a break of structure for then us to be able to identify an area like this here, which will be the order block. Again, this side of trading sometimes can take a little bit to get the hang of, but if you go on my YouTube channel, you'll see there is a playlist there. Let's just see if I can do this while we're on the live here, just so I can show you. Just pause that video. I've got a playlist on here. Let's take a look. Where are we at? So the smart money trade modules. Okay, so if you click on here, why should you invest? What you will see is a rundown, and it's a full breakdown on different areas, understanding structure, okay, imbalance areas, trend, equal highs, equal lows. So that'll be the one you would want to look over, equal highs and equal lows. This is a fantastic video. Again, it goes over structure quite a bit. From there, a lot of comments on there. This has been viewed 1,300 times, guys. So if you head over to my YouTube channel, which you should be already in watching this, look for the training modules, and then look for the smart money side, and look for identifying equal highs, equal lows. This would be a fantastic video for you to follow up on and watch as well. Okay, so I'm just gonna get rid of that. We'll go into here. We may be getting the push. We may be getting the push up now into this area. Again, let's deep dive. And we spoke yesterday about things with imbalance and things like that. So at the moment, excuse me, at the moment, there's nothing with regards to imbalance that needs to be met. So there's good price efficiency on here. So we might have missed this, other than obviously there's just the order block for them to come back and to mitigate into. So we might get the drive down into deeper areas. Again, the overall workflow, the overall look, I'm still anticipating this to be touched before they rocket off. And again, this might not happen today. It might go into the start of next week before it does that. But the general bias for this week, we've been stuck in quite a bit of consolidation, to be fair, compared to the last 4 weeks. So next week, I'm hoping, once we go into next week, if we do get that push and that drive, this strategy and this technique of my trading style is all based upon attacking the trend and following the continuation of the trend, if that makes sense. So again, I'm going to pause the video. We'll see what will come out. It looks as if we're going to attack the liquidity here, to be fair, because again, we've got liquidity there. We may attack that liquidity, to be honest. So we've got a low here. It looks as if it's going to do that, to be fair. Again, if it does that, that's a 1 to 2.26. We then could technically, if it does break that, we could sort of look at that as an order block. It's a very, very fine line, to be fair. And if it did, it depends where it would break. We could technically get a 1 to 4, some stuff like that. But we haven't broke the structure yet. So that there is a possibility. There's a possibility we'll be back in the next few minutes to have a look at what's happening. Yeah, so let's have a bit of fun. We've got the 1% we can risk the day. So we're going to go for the short, there. Take it around about here. Go for the 1 to. See if I can get the 1 to 3, guys. Cancel this one off. Again, we're getting rid of that now. We're looking for the swing into this. Structure-wise, on that. lower high. Let's just see if we can, let's see if we can grab a trade. I've got me trade moved on my live account, to be fair, as well. So again, if this happens after the half past, I've still won. We're looking for a 1 to 3. See what we can get from it. We should be more, to be fair, because in all honesty, that there has been, again, the break of structure. We now have a new liquidity area, and the liquidity areas should normally always be the one for the TP areas, if that makes sense. But again, from within structure, I'd be happy with a 1 to 3. I don't really want to be too greedy. I'd be happy even if that went to a 1 to 1.5, to be honest. It would then boost our 1% today to 2.5, which is good. So it's about what you can take out the market and what you're happy with for to end the day with, because we are technically in on Friday. We're trading Friday, and I don't like to be in on trades for too much, if I'm honest with you, which was always harder for me back in the day, because I used to always do longer term trades. Scalping, you can be in and out within 5-10 minutes at that, at best. Again, pretty good amount of risk on this one, but it's only just over the pip of stop loss. However, looking at price action on here, the only thing that this can come to attack, if it sort of broke structure up on here and stopped us out, would be the order block of this area previous. Now, this happened to us yesterday. Hopefully we can see if we can get a quick entry and a quick in and out. We have got 4 minutes left. I'll be back with you in the 4 minutes to let you know what's happened, and then we'll have a conclusion and a full-time talk. Okay, guys? So I'll speak to you soon. Hi, guys. So it's just as well we ended the trading at 10:30 for documentation purposes. As you can see, if we'd stayed in it on the live documentation, we would have been stopped out. Okay, so again, we've protected what we've had today, in fairness. Sometimes these things work out and sometimes they don't. So we've got a 1% growth today, which is good. We've gone over, and let's just stop the share. Let's have a look at the revised area, to be honest. Okay, so we come into yesterday from a downtrend into an accumulation area. Again, over that time of quite a number of hours, 6 o'clock last night, so just over 12 hours, if I remember from the beginning of the session, 10 pips. That's all that was, around about 10 pips of movements. Okay, over 12 hours. Okay, and from there we've got pip wise in the space of an hour, we had 16 pips within the hour, 10 pips, 21 hours. So again, accumulation, spike. So on that spike going into today's session, we started talking about breaker structures and liquidities, and then how the return from the breaker structures flagging into the order blocks. You could have had around about 4 trades of winners here, roughly, without looking too much into it. You possibly would have get around about, because these are just short-term ones, around about 3 or 4% overall, at 1-to-1s possibly. And then as we've come out with accumulation, we've got the impulse drive, we went into distribution, and then we've come out of the trend on the downside to come back up. And then we spoke about obviously lower highs, holding liquidity areas, and then the lower lows. And then that's your range you work between. Okay, as you are coming down, we worked within the parameter. Or this one here would have been a good trade to take. We hadn't taken that, unfortunately. You come back into respect and test that, and then because we didn't take that, it was simply because, as you can see here, the lower and the high point, it was stuck within range. Okay, it was a range within a range, if that makes sense. So we've got a big range here. This was a swing point inside of a range, so that's why we didn't get in on this trade. From there, we had to push out of the the lower side of the bigger distribution range area, and then as we come into play, we didn't quite get the return before the field of play or the time was up. So in essence, we saved ourselves from losing that 1% gain today. So we've gone over structure pretty well, to be honest, with the whiteboard and also the run of play what we do. Okay, so I'm just going to stop the share, and then we'll have a look at the sheet, because once again it's the end of the week. So Friday, let's have a look. Share screen. So let's have a look. That's the total for the week here. Copy that. I want to copy this here. Total for the week here, we've got a -1, a -1, a 2.0. So let's get this all done nicely. So we've got a -1. No trades were taken on the 19th. Then we had a -1 plus a 2.07. That gives us a 0.07, 007. A -1. And then we had a +1. So that give us a 0.07, just above break even for the week. So it's still, I'm happy with that. It's not a loss and it's not a massive gain, but we look at it this way. It is still profit. Let's just take a look at this. We just go into this, go into this. So next week, guys, the 26th, which is the Tuesday, I won't be trading on the 26th. I've got a big hospital appointment. The rheumatologist I've got to go and see for the medication I'm on, and also an update on the arthritis condition that I've got. So the 26th, I won't be trading. That'll just be a day. That'll just be a day of where I'm at the hospital, to be fair. So I'm just setting this up, and then we're going to have a full-time talk. 25th, that will be going into next week. Get it right, John. Right, so that's the end of that. Stop share, put my big head on big screen. So this week, we worked more on understanding structure points, point of interests, and balances, whereas we went into session on session looking at the order blocks. Now, the reason why I went more deep diving into the session with point of interests and balance areas yesterday, and today the liquidity and equal high, equal low sort of thing, is simply because we're being stuck in some consolidation this week. So yes, this week has been relatively hard in trading, but at the same time, we've took a few trades. And at the end of the week, we have still been above the water. We've had our head above the water still. So it's been a good week. I've enjoyed it, to be fair. There is other trades that I've taken outside of that sort of timed sort of zone, if that makes sense, on my further live accounts, because I normally trade 2 or 3 accounts. But if, like I say, guys, if you're enjoying what you're seeing, if you're enjoying what I'm putting out there, there's a couple of things you can do. You can support the channel. You can simply just there'll be a join button somewhere on the bottom of there. Just hit the join button, and then that just supports what I do on the YouTube here. And I'll give you access to all of this sort of stuff just above me. And from there, we can get on sort of more in-depth, not like one-on-one sessions. That will come over time, but we'll certainly, I'm here to help you as much as I can if you're supporting the channel as well. Okay, so if I get the support on the channel, I give the support back as always. And again, if there's anything that you are struggling with or anything like that, you just have to let me know. And if there's anything I can do or do a little video for you, I will do that. And that all comes with when you are helping the channel, being supported here. Okay, guys. So that's been the end of today's session. Been relatively slow today, as Fridays normally are, to be fair. But again, I hope this breaker structure and liquidity sort of stuff doesn't sort of mess with your head too much. It can be a little bit much to take in, to be fair, when you're first looking at structure points. Okay, looking at imbalance and things like that is pretty straightforward. They're pretty easy to sort of explain and see on the charts. When it comes to liquidity and things like breaker structure and things like that, and structure points of low lows, lower highs, or higher highs and higher lows, sometimes you have to re-watch some of the videos. Okay, but if you do go to my playlist on the bottom somewhere, you will see Smart Money playlist. Okay, and in that Smart Money playlist, you will see a great video that says equal highs and equal lows, and you can get more out of that as well. That's been watched over 1,000 times, so it is a really good video to go through. Okay, guys, so that's me for this week. My name's been John Docherty, Mr. Forex Fire. Let's go into next week, hoping that obviously we are going to come out of these consolidation zones on the Euro USD. I'm going to continue just to trade the one pair and document that one structure point of the 2 hours. Okay, guys, so thank you very much. We'll catch you later.